Wednesday, July the 17th, 2019. It's about 7 a.m. Sydney time. The markets are consolidating, going sideways at the moment in Australia. There's a few leading stocks that have been rolling over, having small retracements. Xero, Telstra, the oil stocks are getting hammered at the moment. So it's certainly a time, even though the market's in a strong uptrend, that in my short-term trading account, my stop losses are, they're always really tight in the account, but I'm getting stopped out of some of them with the tight trailing stop losses. In the long-term account, the major trend is still up, and so I'm just following my rules for that. Okay, in America, the markets are very strong. They're making new all-time highs. We had Disney break out to new all-time highs a few days ago. We have Amazon back at all-time highs, near all-time highs, I should say. We have Facebook getting back up there. This is a weekly chart. So the American markets are very strong. The Aussie markets are still in a very strong uptrend, however, just having a pullback, and you just need to be a bit patient there and wait for the good setups to come along. Okay. This week I'm going to run through a few stocks at the end. However, I'm just going to also run through a few books which have been really helpful for me, and I know have been helpful for a lot of other people. And I think this week I'm just going to concentrate on books that are really good for medium to long-term investing and trading. So talking about people who want to buy stuff and hold them for months to years. Okay. Next week or the week after, I'll go through some cool books for really short-term traders, day traders, to a couple days to maybe a week, and books that I found really helpful for that stuff. And then a week or two after that, I'll go through some psychology books for the mental side of the game. It's probably way more important than all these other books I'm going to show you, but obviously it's really is what very few people actually read. And right now, I bet you there's heaps of people just glazing over as I talk about the psychology of it. And if you're one of them, then you probably need to read it more than, urgently. Anyway, moving on. So, first of all, some books for medium to long-term stuff. Obviously, Frank's book, Exploding the Myths, is great for beginners. It really is a no BS guide to investing and trading. It explains everything you need to know to get started. It's probably one of the first books I read in ages ago, and it's a cool book. So everyone, hopefully pro trader members have read it. If not, grab one and get stuck in. So the next book. This book was a game changer for me. Stan Weinstein's Secrets for Profit in Bull and Bear Markets. It's a bit of a classic. Stan has this, it's not that revolutionary or anything, his theory, but he analyzes stocks on weekly charts and looks for huge bases with certain volume characteristics. And he looks for base breakouts, and he looks to ride them using the 30-day moving average. The reason I think it helped me a lot, and it helped a lot of people, is that it breaks stocks in stocks' lives into life stages or life cycles, whatever, and you have the stock basing for months to years, and then breaking out in a stage one advance, and then basing again, and then usually breaking out in continuation, and then basing again, and sometimes breaking out or sometimes rolling over. And it's super helpful way to look at the market, because you start looking at kind of what stage of the life cycle each stock's in, and it's a really good book. So I've read that a bunch of times, and I think it's a must for anyone who's serious about doing well in this business. Moving on, so these stocks by William O'Neill. It's it's in its 4th edition or whatever, but it doesn't now really change as much. It's a must read. It's funny when you read some of Jack Swagger's books that interview some of the best traders in the world. This is probably the most read book out of all of them. It's a bit like Stan Weinstein's Secrets for Profit in Bull and Bear Markets, in the sense that it only looks at weekly charts, and it looks for charts that are breaking up out of medium to long-term bases, and then it looks at consolidation setups too. and it looks at some 3 tight weekly closes, and then a breakup and a continuation of that uptrend. It also is, this guy's the inventor of CanSlim, which you guys can research that. I mentioned it the other week as well. But CanSlim really just looks for stocks with massively increases in profit, from year-on-year increases in profit. So, at least 25, but hopefully way more percent year-on-year and quarter-on-quarter. So that's looking at the same quarter last year to the same quarter this year, because that takes away, seasonal variations, right? So, and you want to see massive growth in these stocks. So this is a growth investing formula, this book. And then the other thing he looks for is revenue increases. So, massive increases in revenue, quarter on quarter, at least 25%. But some of these high growth stocks have 100, 200, 300, 400% increases in revenue. It's just massive growth. And so it's a really good book. I've read it so many times. Sometimes if I'm going through a bad patch in my trading, I'll go back and just analyze it again. And it's just there's so much good stuff in there. So if you haven't read it, I highly encourage you to do so and read it at least a few times. It's not the easiest book in the world to get through, but it's certainly worth it if you can get it done. And so, right, moving on. That I did not mean to press. Yeah, so this is the old classic one, How I Made $2 Million in the Stock Market by Nick Davis. It's not a very technical book or anything. It doesn't have that many charts. It does have some at the back, but it's just a cool book because it's fun book to read, and his story, how he dances around the world and then just looks at end of day data that comes through on cables, and I got a lot from it because he's just an ordinary guy who didn't go to finance school. He's not the finance type, yet he did really well. And I tend to think that his risk management maybe wasn't very good, but it worked for him. He got lucky maybe, but he also, it was more than luck. He had skill to sit with winning trades and to pyramid. I tend to, with my trading, as stocks go up, I tend to scale out of them and then sometimes buy back and scale out and buy back, whereas this guy just tended to pyramid. And it's certainly, I think that's what some of the best traders in the world do, but it's a really hard thing to do unless you're in a raging bull market. And it can work then, but other times it's risky. But it's a super fun book. If you haven't read it, highly advised. Okay. So look, another cool one is Stock Market Wizards by Jack Swagger. This is a pretty old book. I think I read this right after it came out, I think, and he's got like 4 books now. But this one just interviews stock traders. It doesn't interview kind of FX or futures and commodities traders or whatnot. And so it's really good. It just for everyone who just wants to trade stocks, it just teaches you really that there's no right way to trade, that you need to figure out what works for you and what suits your personality, and you need to have an open mind. And there's personalities and successful people in that book who have they have very varying strategies, and it really is beneficial to just hear their stories about how they did it. All right. Okay, so they're the 5 books for medium to long-term investing that if I had to choose 5, the Seas Maud, if I had to choose 5, I reckon they're 5 pretty cool ones. Alright, so let's get back to a few stocks. So there's just a few stocks I was going to run through tonight. Bingo, yeah, they're in the waste management business, these guys. They've been buying up a bunch of businesses lately, and they have an increases in revenue by 25%, and their EBIT let's just call it. I'm not going to go through EBIT. Just if you don't know what EBIT means, just Google it, but let's just call it profit from now. So its revenue's up 25% and its profits up 4%. So its profits up hardly anything. 4% is certainly nothing exciting. The revenue up 25% is pretty cool, and it's in an ascending triangle as well. So it broke out of that ascending triangle on Tuesday, yesterday, and it didn't close above its resistance line. It had some decent volume on the breakout, like a little increase in volume, not a massive increase, but it's certainly a nice ascending triangle on a daily chart. And let's just see if this is a successful trade or not. You know, in a good market, setups like this will just race up to their area profit target region, you know, relatively quickly. But you know, there's a chance there's a few stocks that are breaking out and rolling over at the moment, and you know, I think we need to be careful at the moment. But anyway, certainly a nice setup, broke out today, so let's see how that goes. Still watching this guy. It's based in the volume small, and you know, it's certainly nice. If this wakes up on big volume, I'm going to be buying that one. Northern Star, I've talked about a lot over the last few weeks. Northern Star loves to break out of boxes and then pop back into boxes like it did back here. We did it here again. It broke out by a few pips. I think it's definitely sucked me in. I got in and then it gapped down the next day, and I just kind of held my nerve and stuck with it. I'm in there, and let's see what happens to that. But I think just when you're choosing stop losses, I mean, I'm just using traditional Darvis box stop for this because, you know, I think I'm hoping that gold has a run and these stocks have a lot more in them, but who knows. But I was backing it at this box here, so my second purchase here was a lot smaller, and it just means that, you know, even if it comes down here and locks me out at the 10.8 stop loss, it's all cool because I bought a smaller parcel this time than the first time, and I've sold half of this initial parcel. So even if it comes back here, I'm still going to make a profit overall on that trade. So that's how I view it, and I'm going to give it some room and just let it do its thing, and hopefully it just cruises up. So I'll wait and see. PointsBet, I'm going to come back to PointsBet at the end. I mentioned this the other week when it was back here in this tiny little pattern here. It broke up violently, but I'm just going to come back to that at the end because I was going to show you guys something different with that. Peninsula broke down, gap down, massive volume. I'm going to delete that one, and I mean, I'll continue to watch it, but probably that one's really off the radar now. Silver Lake, look, it's still consolidating. It's tightening up in this little range. It has some resistance here, and look, it's an interesting setup. It's, you know, this violent breakout here, you tend to get a second move on these stocks, and it's just a matter of picking and waiting and being patient. So, you know, I'm certainly watching Silver Lake. Okay. Now, I was just going to rattle through a few other stocks that we talked about in other weeks, just, you know, Oops, apologies. There we go. Yeah, CSR, it broke up. I didn't trade this. It's a bit slow for me, but it broke up out of this range that we talked about the other week, and it's come back in and it's popped back up. And so, look, it's, you know, let's just see what happens with it. It's, you know, certainly if you're trading at Darvis way and it stops down here, you've got a lot of waiting and patience ahead of you, and to see how that plays out. Dropbox broke out of its Darvis box, not that big a volume, but you know, it increased a little bit, and it's, you know, it's been moving up, you know, pretty smoothly since. So yeah, I'm going to be patient on that guy and see what happens. Beacon Minerals is in a Darvis box, so I do this scan sometimes, which I didn't show you guys the other day, but I just try and do. I increase this to 500% volume, and then I just put it in the first box, and I do that. I just like to see the ones that come up in that massive big volume scans, and Beacon came up in that. And so obviously we had big volume back here, which is why it came up in that scan, and then we're sitting in a box. This guy has like 2.5 billion issued, which worries me. It's way more than I'd like to see. It's a nice setup, but there's just so many out there. Market cap of only 80 million, so it's obviously a pretty small cap. Has a lot issued, but anyway, it's nice. It's a nice box, and it's a nice, you know, nice volume characteristic. So I thought that guy was interesting. Okay, and then Liontown is still going sideways. It's looking like it might challenge this breakout level, and so I have a feeling Liontown, that's all-time highs in Liontown. It is. So let's just go back to 10 years. Let's just forget that. Yeah, so I think that's all-time high for Liontown. If that guy breaks up, that's pretty interesting. It has 1.54 billion. It's quite a few again, but certainly a nice setup. On a weekly chart, let's just compare Liontown to BCN. Liontown's a much better setup on a weekly chart. So if you want to play it safe, I mean, for me, Liontown is a better setup than Beacon. It doesn't mean Beacon's not going to fly to the moon and Liontown's going to be a false breakout. But if you're just playing the odds, once again, if you've got 1,000 trades, then the weekly charts tend to be a bit safer. All right. Now I'm just going to go back to PointsBet. People always seem obsessed with market depth and the order book or whatever you want to call it, and I just thought I'd quickly go through something with, that is not the right one, and just teach people a little bit about market depth and how I would trade this stock. So a similar thing happened back here with this tiny, this is just two inside bar pattern where these two bars are inside here and we have kind of rising bottoms and then a really violent breakout. And a similar thing happened here, but I'm going to use this example. Now, first of all, this stock might break down and come back down here, in which case all this is irrelevant and we don't trade it. But I think for people who everyone seems to be so obsessed with market depth and all that, so let's just quickly go over how I would use market depth if I was doing a short-term trade on this, okay? So let's get the market depth out. Now, this is way before the market open, and so this is obviously going to change before, right when the market's opening, as people put orders in and stuff. But this really wasn't much different at 3:30 p.m. Sydney time on Tuesday afternoon. I had a quick look. I think this had maybe 70,000 or something like that, but it was pretty much the same. So if we can look now, so at the moment, PointsBet is at about $3. So the last trade that went through was 299 shares at $3. That's what it says here, okay? 299 at $3. Now, the resistance on our daily chart here is $3.10. And so if we look here at 310, we have 68,708 shares that are on the offer, okay, on the ask size. And it's called the offer, but anyway, this says ask size. So now what this means, just for people who don't, haven't seen this before, is that this side is people selling. So if you put a limit order in the market to sell, then it shows up on the ask size, right? If you put a limit order in to buy, it shows up on the bid side, right? So all these people over here are just waiting to buy. So if the stock drops down to $2.95, these 22,338 shares are going to get filled. Well, maybe some, maybe all of them. It depends what order in the queue you are, right? Which really just depends how, first in, first best dressed in terms of who's first in the queue there, right? There are ways to jump the queue, but we won't go into that. So so now what I'm looking at is it's down at $3. There's not really anything for sale up here. It doesn't mean things won't quickly come for sale, but it's not at the moment. When you just press buy or sell at market, you're really just accepting this ask price and accepting this bid price, right? So if you press buy at market, let's say the current ask is 3.8, you're just going to get filled at 3.8. Even if the last one was down at $3, you're just going to get filled there because that's what the ask is. If the bid would be $2.99, so if you randomly just press sell at market, you're going to get filled. Let's say you have 1,000 shares that you want to sell. You're going to sell 9, 10 of them at $2.99, and the rest 90 are going to get sold at $2.98. Okay, and so that's how all that works. Now, the way it can be used for explosive breakouts is that, let's say this gets up to 309 and then it gets up to 310. And you can actually, what I would do, I actually watch, the only real time I watch market depth or the order book is when I want to trade an explosive breakout in a pretty low cap stock, because it can work in high cap stock, but doing it with Telstra, it's like there's so many shares there, it's a bit insignificant, but something like this. So let's say hypothetically I wanted to buy 20,000 shares of PointsBet, right? I would just look at this number, 68,708, get slowly chewed away. So someone would maybe do 10,000 and then 5,000 and all these tiny orders that go through 1,200, whatever. and it would slowly get down to say 20,000 shares. Once it's very close to that, I'll be sitting there with an order ready to go for 20,000 shares. I'll have a bunch of alerts that go off on my system, and I press buy with a limit of, say, I would hope that there's some shares here for sale at 312 or 313 or 311. I would have a limit at, say, 312, and let's say there's only 20,000 left at 310 on the ask, on the offer. I would put a limit order to buy with a maximum price of 312, and I would try and buy, say, 21,000, okay? Because I want to take all the 310s out, and I want to also eat up a couple of the 312s, and, you know, which I'm going to get filled first, right? Because my order went in first. And then all these stop orders, start gain or conditional start gain, whatever you want to call it, they're going to get triggered, usually, and the stock sometimes just has a massive quick run up. And then if there's a lot of short-term traders who will then bail out when this thing gets to 320, 330, you know, some of that points back could just race up to $4 before you know it. And that's how it is. It is a risky way to trade. The order book can change in a flash, but it's, you know, it's a way to it's how I use the order book. In terms of if you're a long-term investor or you're trying to be in something for months to years, just forget about the order book. It's so useless for long-term investors. It's not funny, you know. Things can change in a flash. If you're a scalper, day trader, it's useful for long-term stuff. It's best not to waste your time. Okay, that's it for this week. I'll be back next week. Cheers.